Welcome to the Farms.com Risk Management Educational Grain Commodity Marketing School video series. This video series being brought to you by DeKalb Brand Seeds to educate producers and farmers across Canada on how to do a better job of that commodity marketing that we constantly, kind of need to spend more time on. So let's, in this 14th video series, and this is going to be our first out of a total of 4. Today's our first one where we're going to talk about basis. Basis is misunderstood by a lot of farmers and producers, so I'm going to try to simplify it for you today, and hopefully you'll have a better understanding by the time we're done. So we're going to define what basis is, we're going to look at some examples, and then we're also going to define what nearby means, and we're going to look at a historical perspective on basis. I'll give you some examples there as well. And then we're also going to give you some basis marketing tips. So let's start off with what is basis. So you can see from this chart, you got the futures, you got the basis, the difference, the cash price and the futures, and the difference is basically your basis. It's the difference between the futures price, the nearby futures price, and your local cash price. Basis is important in your pricing decision because it can add or subtract from your bottom line, from your total return. So understanding the relationship that cash price has to futures and what that basis will eventually equal to is very, very important in some of your marketing decisions going forward. This is just a chart, source Saskatchewan government. It's canola basis. You can see the futures, you can see the base, the cash price, and the basis here, and you can see what basis does with futures as time moves on. So remember though, futures is your biggest risk, not basis. Basis is a smaller part of your decision going forward. Corn futures can go from $7 a bushel to $3 a bushel. Rarely do you ever see your local basis move that wide within a very short period of time. So let's go through an example with corn. In this example, we're saying that futures is $6.26 and your cash is $6 a bushel. If that's the case, then your basis is 20 under. Okay, if corn futures are $6.26 and your cash is $6.60, then your basis is 34 cents over. Okay, so when you got a surplus in supply in that local area, that means that supply is plentiful and you will get a negative or wide basis. Let's give an example with canola. In this example, we're saying canola is $560 a metric ton and cash is $550. So your basis now is 10 under. If canola futures is $560 and cash is $600, then your basis is 40 a metric ton over. A deficit in supply, so where there's maybe a lack of supply, too much demand, equals a positive or very narrow basis. Here's another chart. This is a chart of canola again, showing that basis in futures. So what's the definition of nearby? Basically, it's typically if a farmer's selling into say a February contract, he'd be selling off of the March, which is the nearby futures contract. So January will be matched to March, a March will be matched to May, and a November will be matched to December. Here's an example with wheat. You can see from the difference between July and say, I think it's November or January, it's about 46 cents. So we'll talk a little more about that later in our third video series where we talk about the cost of carry. Okay, you can see that if you were to sell into the April contract, it'd be off the May, and so on and so forth. Let's give you a historical perspective. This is just a quick chart on flax basis in Western Canada. But having understanding that historical basis is very, very important. Having an idea of what that range has been over time. For example, a minus 50 cent corn basis in Ontario, is that good or bad? Over the last 10 years, that's kind of a neutral, slightly negative number. Knowing if a minus 40 per metric ton basis on canola, is that good or bad? That's typically very wide or bad for Western Canadian producers. So what this simply means is a producer could just say, I'll pass on it for now and I'll look for a better basis into the future. Here's an example, and this is a source here is Viterra.com, and just looking at the barley and canola and wheat non-wheat board feed prices and basis, and you can see the barley basis is pretty good. Canola basis is smaller in the front months but widens as you get further out. So, you know, pretty good basis there in the front months. You still got some canola in the bins. Barley basis historically very high as well. This is Canadian wheat board and some prices in wheat for spring wheat for December 11 and beyond. And you can see some of the bases here are quite good. So producers may want to look at maybe locking in some basis there for new crop. This is basis example. Farm Market News is a source. We're looking at both old crop and then new crop. Corn basis, you can see old crop is smaller, -50 versus new crop at -1. -1 historically very, very wide. For corn over the last 10 years, it's been -110 on the high end to about a +1. Bean basis in Ontario about -3 to +3. Wheat basis for soft red winter about a -20 to a -5. Never been a plus basis in Eastern Ontario for soft red winter wheat. So knowing that information is critical because it can help you do a better job of managing that basis. So some helpful hints. Look, if you don't know what your basis says, maybe get your local elevator or several elevators within your area to just fax you those numbers, that basis, maybe email it to you, maybe just go visit their website. A second tip is don't rely on one local elevator. You'd be amazed how if transportation makes sense, calling 4 or 5 end users. I did that for our own corporate farm that we own one year where I was trying to sell some corn bushels, and by the time I picked up the 5th phone call, I made as much as 80 cents more per bushel because that was the difference in price between one and the other. So don't be afraid to pick up the phone. And the last tip I would suggest is don't be afraid to do a basis first contract. When you really have a good basis and you know it's a good basis, don't be afraid to just pull the trigger, do a basis first contract, and then you can price futures at a later date. So, in summary, understanding that basis and how it relates to futures and knowing your local market can assist you in doing a better job of managing that basis and providing a better return to your bottom line. Ignoring basis should not be part of any risk management marketing plan. Too often, many farmers take what they can get when those bushels are ready for market. In our next video series, we're going to look at basis for non-storable commodities such as livestock. Thanks a lot for spending some time with us today. I hope you've got a better idea of how basis works. Keep it simple. Don't make it too complicated because it can get very complicated. But don't forget to keep an eye on that basis, understand that historical perspective, pull the trigger when it's quite narrow or maybe a positive basis. I always like to say a positive number plus a positive number equals a greater positive number. So if you remember that, you too will add more dollars to your bottom line. Until next time, thanks for watching. Have a great day.